Good evening, everyone. This is Manish Dabkara. I am MD and CEO at EKI Energy Services Ltd. We are about to start in a minute.
Hey, good afternoon, Manish. Hi, everyone.
Hi, Andrea.
Would you like us to keep our cameras on?
As you wish.
Off when we're not speaking?
Yeah.
If everyone is off, I'll turn it off as well.
Hello, Manish.
Hi, sir. How are you?
I'm well, thanks. Hi, Andrea. Hello, Mr. Rashmi.
Hello. Hi, Kishore.
All right, so let me start the webinar. So good evening, everyone from India. We are hosting this webinar over the outcomes of COP27, a carbon markets perspective. We have industry eminent speakers as panelists. So first one is Mr. Andrea. He is the International Policy Director. Later on, I will do inform you more about these speakers. Mr. R Rashmi and Mr. Kishore Rajhansa. I wish to let you know some slides about what is EKI and what we do. So our brand name is Enking International, while company name is EKI Energy Services Ltd. We are one of the world's largest carbon credit project developer, having 3,000 clients at 40 plus nations and having growth journey of 14 plus years. We have many national and international clients of repute. We do provide three different services. One is for the seller of credits, one is for the buyer of credits, and one is for the investors. So for the seller of credits, we provide comprehensive advisory services for carbon credit project registration, verification, and trading through different programs, carbon credit standards like CDM, VCS, Gold Standard, GCC, IREG, and more standards. For the buyer of credits, we help them to determine their carbon footprint at the project level, at the company level. Also help them to do say sustainability reporting through CDP or SBTI or other different pledges if you sign, and ultimately at last one we help them to after having low carbon pathway implementation of low carbon pathways to reduce the emissions at the industry level or at the company level or at the project level. We help organizations to offset their emissions, the non-avoidable emissions. Third thing is for the investors. We have two different subsidiaries. One is GHG Reduction Technologies Private Limited, through which we are manufacturing energy efficient cook stoves in India, having manufacturing capacity of up to 5 million cook stoves per annum. And through nature-based solution, for the nature-based solution activity, we have a joint venture company called as Royal with the Royal Dutch Shell named as Amrut Nature Solutions Private Limited. And through this specific company, we are investing into the nature-based solution activities in India and nearby nations. These are the different types of projects that we do, which is related to renewable energy, energy efficiency, nature-based solution activities, community-based projects, waste management projects. So as you know, almost 170 different types of carbon credits that can be generated from various different sectors, and we do have internal capacity to execute all different technology projects located in various places. So the next slide of mine do mention about the summary of COP27. So the discussion had been done related to loss and damage. Finally, a forward step. We have to institutionalize a mechanism for financial assistance to the vulnerable nations, developing nations, small nations. Appreciate lead taken by the European Union and also strengthen the Santiago network. phase down of the fossil fuel utilization of fossil fuel. So there were the lukewarm negotiations given EU energy security and North America's interest in the gas as a fossil fuel mitigation work program. So the detailed discussion will be done by or information will be given by my other speakers. So I will just run through it very fast. Adaptation fund had been discussed. World Bank reforms had been discussed. Just energy transition discussion were done related to the climate finance, African special needs or circumstances. So the conclusion is most COP27 negotiations were inconclusive. So specifically related to the compliance carbon market, that means through Article 6 of the Paris Agreement. Pressure is now directly or indirectly on the market for urgency in action, and aggressive push for market-based standardization may be granted for dependence on voluntary market actions. A positive yet limited steps forward for the carbon markets, and finally related to the voluntary carbon markets, since Paris Agreement do not govern the voluntary carbon market, so not much had been discussed. But the first time it had been discussed related to the mitigation contribution to Article 6.4, and maybe Andrea would be able to cover the same in detail related to this specific topic, which is quite similar to the voluntary carbon markets. So related to the speakers, we have Andrea. He's International Policy Director at IETA. He will be focusing on Article 6.4. Andrea joined IETA in October 21, where he leads activities on international carbon markets and specifically Article 6 of the Paris Agreement. He is also a visiting professor at Sciences Po in Paris and the College of Europe in Netolin. Prior to joining IETA, he has worked at EDF trading in London and the United Nations Economic Commission for Europe in Geneva. Mr. R Rashmi, he is Distinguished Fellow and Program Director at TERI. He is an officer of Indian Administrative Services batch 1983. He had got retired as Chief Secretary Government of Manipur in 2018. He was India's principal negotiator for climate change negotiations under the United Nations Framework on Climate Change for several years and was part of climate change policy making in India in the run-up to and after the Paris Agreement. Currently, he is Distinguished Fellow in the Center for Global Environmental Research in TERI, which is a world-renowned think tank based in India, where he works on the areas relating to the climate change mitigation and adaptation strategies, carbon markets, and related issues. And finally, we will be able to hear from Mr. Kishore Rajhansa. He is the Chief Operating Officer at Global Carbon Council. Mr. Kishore Rajhansa is a climate change, energy, and sustainability leader with a professional experience of around 27 years, having leadership position at various national and international organizations. Currently, he is working as CEO at GCC, based at Doha, Qatar. He is primarily responsible for designing and operationalizing Global Carbon Council, a CORSIA and ICROA approved global voluntary carbon market that is first ever from the MENA region. So now I request Andrea to take over the floor and cover more information about Article 6 and the relevant decisions that had been taken during COP27. Over to you, Andrea.
Thank you very much, Manish. Good evening, everyone. It's a pleasure to be here, to be part of this webinar. So I'll give an overview of Article 6.4 and highlight the key points in the text that are relevant for the private sector and the voluntary market. So it is no mystery if I say that it was a very difficult negotiation. Parties are still quite far apart from each other in terms of some of the key principles around which the 6.4 mechanism should be built. And there was a point in the negotiation around Thursday of the second week where people were starting to get quite pessimistic. If we were comparing Sharm el-Sheikh with the progress in Glasgow, by Thursday of the second week in Glasgow, we could see a path towards a final agreement, whereas the text was still heavily bracketed. There were still many options in the draft text on Thursday. So there was really a push in the last day that showed the willingness of parties to make progress in spite of the differences and move ahead with implementation of the mechanism. So we knew before entering COP that progress wouldn't be easy and wouldn't be fast. Now, some of the key decisions in terms of establishing the 6.4 mechanisms are in the hands of a smaller body, the so-called 6.4 supervisory body, composed of 12 members and 12 alternate members. This body can only meet in the second half of the year because countries took several months to agree on the nominations of the members of this body. And in a meeting the week right before COP in Sharm el-Sheikh, they failed to agree on key documents relating to methodologies. A document that is necessary to operationalize some principles in the Glasgow text. So we knew whatever happened in Sharm el-Sheikh, we knew that a lot of work still needed to be done in 2023 and beyond by all parties and more specifically by the 6.4 supervisory body. So development of this mechanism is slow, and that really leaves the market with fewer options for crediting. Project developers that want to obtain credits for their project only have the voluntary market as an avenue for credits, and this would be the case for a few more years. Whereas countries that want to implement Article 6, they are left with 6.2. And 6.2, however, is very important. My fellow panelists, I'm sure they'll say a bit more about the status of implementation and the ongoing projects. But unlike 6.4, where a lot still needs to be done, for 6.2, countries basically have what they need to go ahead and implement and set up the bilateral framework and let and allow for transactions, allow the market to develop projects, authorize ITMOs, and then ITMOs will be traded on the market. So yes, 6.4 is very important, provides a centralized crediting mechanism at the UN level, but fortunately there are options in the market. And I'd like to touch upon a couple of points in terms of the content of the decision. As Manish mentioned, one of the key items in the decision for the private sector was the elaboration of the concept of mitigation contribution ERs. These are credits that are issued by the mechanism, so they are real certified emission reductions, credits that exist, but they're not authorized for use towards an NDC or other international mitigation purposes by the host country. That means the country has not authorized the credit and committed to a corresponding adjustment. So they are credits that represent, as I said, real emissions, but without corresponding adjustments. These have been called mitigation contribution ERs, and in paragraph 29B of the decision, if you want to go back and read it, they mention a number of uses for these mechanisms. However, there's also a key phrase, inter alia, which means amongst others, and it means that the uses specified in the decisions are not all the uses that can be made with this unit. So we interpret that as effectively acknowledging that this credit can be used for a variety of uses, including voluntary purposes, including voluntary targets of companies, and that's a key recognition. It's not something, if you asked me last year to interpret the Glasgow text, I would have said the same thing, but now it's clearly spelled out in the text, even though perhaps not in the most clear formulation due to the long and heavy negotiation that took place in Sharm el-Sheikh. Another point I want to touch upon is the issues around authorization of credits. So as I said, authorization, the process that triggers the corresponding adjustment. There were long discussion in the negotiation room at COP on this topic, but then nothing in the final text showing really the lack of agreement between parties. And it was agreed that this will be one of the topics, possibly the most important topic, to be tackled next year for hopefully a decision at COP 28. From the perspective of the private sector, of course, it's important that there's clarity around authorization, that once authorization is granted, is not changed retroactively or revoked. And I hope we have 1 year to work on these topics, make sure that countries work on a framework that helps both with national priority of countries, but also helps the private sector in delivering investments in mitigation, triggering these investment flows that are needed. Also, some good elaboration on the CDM transition that I can touch upon in the Q&A if there are questions. But overall, I would say a small outcome, but a positive one, a step in the right direction. And I'll hand back over to Manish. Thank you.
Yeah, thanks, Andrea, for the information about Article 6.4 specifically. Now I request Mr. Rashmi to let us address about the outcomes at COP. Thank you, sir.
Oh, thank you, Manish. Am I clearly audible?
Yeah, it's okay.
Thank you very much. And thanks for organizing this webinar and this consultation after the COP. It's a good opportunity to review the progress not only at the global level, but also what is going to happen at the national level, particularly in India. Your organization has been working for so long with a very large presence and very substantial contribution to the voluntary market in India and abroad. So the developments at Sharm el-Sheikh have been quite significant as far as Article 6.2 is concerned. And I compliment my previous speaker, Andrea, who has very correctly outlined the challenges as far as 6.4 carbon market is concerned, the mechanism. See, the challenge to 6.4 mechanism had begun at Glasgow itself, and from India's perspective, the people who are operating who have been operating earlier in the CDM market and now in the voluntary market, they will have to wait for the clarity to emerge for some time. But on the other hand, the 6.2 market has got some fillip at Sharm el-Sheikh because there is some progress as far as the authorization procedure is concerned. There is some degree of consensus on the way the 6.2 registry and the trading should happen. And even most of the governments are now keen on operating this 6.2 as quickly as possible. In fact, the co-facilitator of the group was happy to share with us some of the developments.
Video on
when the negotiations were going on, that there was a very close cooperation amongst the negotiators as opposed to 6.4 group. On the 6.2, the negotiators were quite willing to cooperate with each other and understand each other. Of course, there were difficult issues there, essentially about the interoperability of the two registries, of the 6.2 registry and the 6.4, the mechanism registry and the international registry. And that problem still exists, but to some extent it has been resolved to the extent that the people who want to trade on the basis of Article 6.2 registry, they will have a right to pull out the data from 6.4 registry as long as they are registered on the international registry. So although the registries are not interoperable strictly in that sense, but the data can be captured, data can be secured, so that those who have the prior authorization, they will know what is the extent of the credits available to them for the purpose of trading. Now, as far as authorization is concerned, you have just heard, Andrea, that the authorization in 6.4 registry is a little tricky. One is not clear, but by implication, it's if you look at the national markets, anything that is authorized for 6.2 trading under as ITMOs, that would give you a sense of which are the activities and which are the sectors which are left for operation in the voluntary market and as well as 6.4 market. So although there is no clear segregation here in the national carbon market, they haven't clearly distinguished between what kind of which sectors would be allowed for 6.4 trading and on the basis of the mechanism registry, and those which will be allowed on the basis of the international registry. That segregation or that clarity will need to emerge in due course. But to the extent that the authorization procedure has now been more or less put in place, the governments, those which are in the process of developing a national market, will have a slight greater degree of clarity on this. And by implication, we can assess the extent of the credits available for mechanism registry and also for the voluntary trading. Now, one question which would, I think, bother and which may have to be dealt with in due course is the extent to which the credits available will be used for compliance markets as well as voluntary markets. Now, that again, this clarity doesn't exist at the moment, either at the global level nor at the national level. But this possibility does exist, and I think in future, the regime may, given the way the negotiations have been developing, there is a possibility that some of the credits in the voluntary markets may also may allow to be used for compliance markets under 6.4, provided there is some consensus on this. And methodologies will, of course, the methods will need to be devised for this purpose. But for the purpose of greater flexibility at the national level, I think this would be something which would be desirable. Now, the last question which I wanted to touch upon is the question of the price referencing. There is a certain feeling in the national markets that the voluntary market is completely unrestricted, completely free, and therefore it is susceptible to greater degree of fluctuations in the prices. So to some extent, a referencing may be required. Now, that referencing may be based on the compliance markets or Article 6.2 international registry. One is not sure, but there is a certain sense that this kind of price referencing may develop at some point in the evolution of the national market. So I'll stop here and then let the other speakers take the floor. And thanks once again to Manish for giving me this opportunity.
Yes, sir. Thank you. Thank you very much for the contribution related to the outcomes of COP. Now I request Mr. Kishore to take over and add some more information related to the outcomes, specifically related to the voluntary carbon markets or Article 6 of the Paris Agreement. Thank you.
Thank you, Manish, and thank you, Mr. Rashmi and Andrea. I think most of the points are covered by my previous two speakers, and both of them deal with the negotiations directly. I'm talking more of as an operator of a GHG program, the voluntary carbon market program, and I wanted to have my own messages coming from these negotiations. So for me, this COP has added a lot of clarity in the rules, and most importantly, the letter of authorization. As rightly said by Mr. Rashmi, who has represented a country and he understands the troubles and the finer points of authorization, which are very important to understand for a government as well as for the GHG program as well, like us. So the letter of authorization is something which has been clarified a lot. The interoperability issue has been clarified. I can see that the tracking of the ITMOs, the issue related to maintenance of account, opening of the registry account, what nature of these registries would be, how they will be connected to the central system at the UNFCCC level. So these things are much clearer now as compared to the previous COP, and that is, I think, a visible progress of these negotiations. On the other side, I take the point which was mentioned by Andrea under 6.2, particularly the paragraph 29B, which is still opening the ways for voluntary carbon market credits to be used for the private sector carbon neutrality. I think that is a big plus, because there has been quite a lot of uncertainties. Of course, there are many other uses for which the voluntary carbon market can be used, particularly when the credits are not authorized. But among them, and you see that the vague text on the inter alia part, which opens it for even for the voluntary carbon pledges made by the corporates, and including carbon neutrality pledges. So that is a good news, which will keep the voluntary market going up, and it will be a big boost in demand in the voluntary markets. And there are discussions which are happening if voluntary markets can be used in 6.4 as well. That is also a good news. But what is now important is that the implementation of Article 6.2, and I think that is the way forward. Apart from voluntary market, the pledges of the corporates, the voluntary credits can be used as an ITMOs as well. So the GHG programs can also be recognized by the parties which are entering into cooperative approaches, or voluntary markets can be recognized under the carbon tax schemes or the ETSs of the domestic for the domestic purposes. Recently, like GCC has signed with the government of Singapore, the GCC credits can be used as a carbon credit for the carbon tax abatement purposes. So this is a very positive signal to the market. On 6.4, the challenges remain, and particularly those are in the area of the baselines, additionality, and removals. These are the three main sticking point yet. And especially the many parties have been discussing what is the role of corresponding adjustment done if we are talking about the sectoral approaches. If we want to adjust the baseline and on top of it we apply the corresponding adjustment, so how both of them will play their own role in determining the integrity of carbon credits. So these are the discussions happening, and these are very, very technical discussion under 6.4, which will take their own time, and I can imagine that maybe a year at least minimum for this to finalize, or maybe 2 years from now. I believe that it should be in the 6.4 should be in complete operation. I hope that it can be accelerated faster than this, but looking at the differences which the parties have within themselves on the key and core issues related to baseline and additionality, my experience suggests that these issues will take a lot of time. So I will stop here, and then I'm happy to respond to the questions. Thank you.
Yes, thank you, Mr. Kishore. Now, I request Andrea, if you can add some more declarations that had been done under Article 6.2 or by the private sector. So if you can cover that specific information that is going to boost specifically the Article 6 and voluntary carbon markets.
Well, yeah, thanks, Manish. Yeah, I think there's been a lot of interest in Article 6, specifically 6.2 in the private sector. And I think it's quite clear, and Kishore provided an example of what GCC is doing with Singapore. It's clear that the existing market infrastructure can be leveraged to generate INMOs. As long as countries accept to do that, that's the way forward. Well, it's now the only way for countries to generate credits valid for compliance purposes under Article 6, while we wait for Article 6.4. So I expect that to continue. We had during COP, we heard of the first ITMO trade ever that took place between Switzerland and Ghana. Singapore is signing agreements with several voluntary market standards and bilateral agreement with countries for the generation and transfer of ITMOs. Japan is planning to be one of the largest buyers in the system. We even heard a discussion during a side event at the China Pavilion that China may look into using Article 6 credits in addition to domestic offsets in their emission trading system. So certainly a lot of interest, a lot of action, and I hope the momentum keeps on and the market can keep up with the demands from governments and corporate buyers.
Yes. Also, there had been declaration from the United States of America related to energy transition accelerator. A national or sub-national jurisdictional approach details need to be provided. More details need to be provided through that specific energy transition accelerator, which is the main aim of that specific declaration from USA was to support developing nations like India or China to get the energy transition from fossil fuel to the renewable energies. So that is the main priority, one of the main priority from that specific energy transition accelerator declaration done by United States. Further, many CLIC Foundation had signed 2 MOUs with the 2 nations, 2 African nations. Further, Canada and Chile carbon pricing challenge plan to triple the carbon pricing emissions coverage worldwide by 2030 was a declaration that had been done. Further, Brazil, Dominican Republic of Congo, and Indonesia had launched cooperation. And it had been mentioned by the media as OPEC of the rainforest. So these were a few of the declarations that had been done by the nations. Further, African Carbon Market Initiative, ACMI, promotion of the voluntary carbon market in the region, African specific region. And the goal that had been declared by that specific initiative was to produce 300 million carbon credits every year by year 2030 and 1.5 billion carbon credits annually by 2050. So that is the ambition that African continent is having while giving tough competition to the Asian and Latin area. Nigeria further had informed that they are going to launch an emission trading scheme announced by the Ministry of Environment. Limited details had been given at the COP. Further, Turkey had declared that ETS has been planned in pilot phase 2 within 2 years. They will do start. Revenues of carbon pricing instruments shall be used to promote the transition, focus on energy and small and medium scale enterprises. Further, basic that means Brazil, South Africa, India, and China welcome the market and non-market mechanisms under Article 6 of the Paris Agreement and encourage the use of arrangements that provide SOPs to the adaptation fund. So these were a few declarations that had been done by the private sector during COP27. So I request if the speakers wish to add more points related to COP, otherwise we can open the floor for question and answer.
I think one more thing which is Manish is coming out very clearly, which I said, is that the central database which will be operated by UNFCCC, but it will be also supported by this. I believe, well, of course, it is not mentioned in the decision, but the Climate Action Data Trust will also have a lot of role to play in coming years to be able to have a smooth, I would say, stock take of all emission reductions around the world, as well as the linkages of the national registries to the central platform of UNFCCC. So it will have a big role to play, and we really watch forward for its progress in years to come. So, yeah, because the rules on the tracking and accounts and databases and interoperability has been clarified now. So I think this Climate Action Data Trust can really move forward very fast on this.
Surely. And further, I want to take your quick comment over the type of project, because a few programs, they do allow renewable energy project to get registered after 2020-2021. Few programs they do not allow, like GCC. They are having that means you are having opinion as an organization or the standard that the projects which are located in developing nations like India, China, or Brazil, the renewable energy projects are the most, or the energy transition is the most high priority for the nations like us. So, can you throw some light related to the discussions which is going on in the within the stakeholders of carbon markets?
I would say renewable energy, I mean, this has always been our stand since the day when we were launched, is one of the key mitigation activities for the net zero world. And we cannot close the door of carbon markets to this, just, considering that all the projects are business as usual. So we strongly disagree, while we are committing towards checking the additionality and environmental integrity of these projects thoroughly. So that is one stand. Second thing is that I don't think Article 6.4 is discussing any negative list towards any of the mitigation activities. They will also have, hopefully, and I'm pretty confident about it, that renewable energy is one of the key mitigation activities within this, apart from removals and many other things. And then on top of it, I would say that 84% of the NDCs are depending upon these key mitigation areas. And if voluntary markets are seen to be contributing to meeting the NDC targets, then let the renewable energy producers raise the money through voluntary carbon market instruments and still support the NDC or support the corporate goals of carbon neutrality. What is important is the each and every credit which has been issued by the program must be of the highest integrity. And that is something we are committed to make sure about.
Yeah, definitely. So just for the attendees in coming future for the seller of carbon credits, so they would be having different options to sell their credits originated from various nations or geographies or through different technologies. So like renewable energy projects or energy efficiency based projects, community based projects, further nature-based solution activities. So there are various options. So that means one option is Article 6.2, second option Article 6.2 carbon markets, second option is Article 6.4 carbon markets. In Article 6.4 now we have two different terminologies for the emission reductions. One is the approved and one is the approved authorized Article 6.4 emission reduction, and second one is the contribution to the unapproved or unauthorized Article 6.4 credits. Further, many nations are going to have their own emission trading scheme, like Indian government is also going to have its own emission trading scheme through the Energy Conservation Act 2022, amended EC Act 2022, which is under the procedure to get cleared through the upper parliament house within the government system. And so many nations are planning to have their own emission trading scheme. So this one would be the fourth option for the seller of carbon credits. Further, the last option would be the international voluntary carbon markets. India, I want to, I wish you to throw some light, like many researchers had mentioned that the carbon market will be of, say, 10 billion or 20 billion would be the market size of voluntary carbon markets by 2030. Some had mentioned some figure for 2040, 2050. How do you see, because for a few of our delegates, they may not be having clear articulation related to how the voluntary market will do work hand in hand or in parallel to the domestic carbon markets and to the Article 6 of the carbon markets. Can you please throw some light related to that specific topic?
So the question is for Andrea, right? Yeah, sorry. Yeah.
I can
Yes.
yeah, give some thoughts. So the interaction between the voluntary carbon market and Article 6 is simpler to conceptualize. So there would be credits without corresponding adjustments that can be used for voluntary purposes, and credits with corresponding adjustments that can be used for compliance purposes, such as NDC or CORSIA. And also, if the buyer of the credits wants to, they can be used for voluntary purposes as well. But what turns a credit without corresponding adjustment into one with a corresponding adjustment is the decision of authorization by the host country. So it's a key decision in the hands of the host country. So I expect to have these two markets in parallel, and to have credits with different qualities, sometimes coming from similar projects. But what makes a difference is this host country authorization decision. Then the interaction with domestic carbon pricing and carbon pricing schemes and carbon markets is a bit more complex, and it would really depend on specific circumstances of each country. So if we look at the oldest and most comprehensive emission trading system in the world, which is the one of the EU. In the EU, they do not allow, at this stage, they do not accept carbon credits, either domestic or international, for compliance towards the EU ETS. So the two markets are completely separate. I don't think that's the best model. I think it's worthwhile integrating the two markets. But this, again, it would be decisions at the national level. And I think countries, especially countries with large potential to generate carbon credits, need to fully consider the implications of the implication of the interaction between the domestic market and the international market. And at COP, I think the thinking is in the early stages. At COP, I heard some talks about not selling off carbon abroad, keeping carbon domestically as if it was a natural resource that needs to stay within the country. I can see what country. I'm happy the country are thinking about carbon as an asset. That's certainly good, but it's kind of nationalistic rhetoric. It can be. I don't know. I can't see from a market perspective. I'm not sure where it is leading. I think we need domestic carbon markets. We need international carbon markets. The two need to interact, but making one the enemy of the other, I can't see. I don't see it as being beneficial to the country itself and to the whole world globally in the fight against climate change.
Thanks for the information, Andrea. Mr. Kishore, would you want to add a few points here?
Yeah, so no, thanks. I completely agree with Andrea, first of all. Very good point he has made. My point is that UNEP 2022 report, the GAP report, it says that we are NDCs are falling short of the required ambition to meet 1.5 degree by almost 23 gigatons. So 23 gigatons is not there in the NDC. Who will cover that? It is corporates, businesses, private sector, public sectors. They are coming ahead. They are going to help to meet this gap, which are not yet being committed by the NDCs. Hopefully, in the updated NDC, the ambition goes up and probably this is covered. We need to reduce 60 gigatons approximately per year to have a net zero world by 2050. And clearly, if the NDCs are not covering these emission reductions, it means that there is a lack of finance somewhere there to meet this ambition. And if the voluntary carbon market can be used as an instrument to fill this gap by raising the carbon finance from the private sector, from the businesses, I think this is a great role that the voluntary market will play in the entire mitigation regime. And coming back to this letter of authorization, which is always a very tricky thing, the countries talk to us. We don't know how to issue the letter of authorization. We should not fall short of our ambition, our targets and all. I mean, to me, it is an issue of mathematics and to do a study within their country, which projects, which mega projects are going to bring them their ambition, their targets, and then, okay, restrict your authorization for those areas, policy areas, or measures, and then start making authorization letter to others. There is a policy that many countries are thinking in the direction of having a fund created for issuing the letter of authorization. You charge some fees for letter of authorization, put that fees into the climate fund, and use that climate fund for the corresponding adjustment that you have made and the commitment towards the corresponding adjustment. So everything is possible. Keeping it domestically is not the purpose, because everything is about marginal abatement cost. If I am getting better money by selling my credit outside, then the cost which I will incur in having the domestic action to meet the corresponding adjustment commitment, I would go and allow the sale of the carbon credit to outside. So I think this is the way forward in my view. Thank you.
Okay. Rashmi sir, would you want to add some points to this specific concern related to the voluntary carbon markets?
No, thank you, Manish. I was listening to this exchange between Kishore and Andrea very with attention, and I generally agree with what they have said. I endorse their point about the need to ensure greater flexibility in the voluntary markets and not to restrict them, because it is in the interest of the national economies and the national carbon markets that these credits are allowed to be traded without any restrictions. There are concerns, of course, because the carbon market is fledgling. It is just being set up. It is just evolving. So one is not sure of its implications for the future development of the industry, because as far as energy efficiency and renewable energy and the credits coming out of energy transition are concerned, there is some degree of complacence. There is absolutely no problem. But in future, there could be a problem. I think that is where these concerns are coming from. But I would still entirely agree with Kishore and Andrea that in the national carbon market, we should avoid restrictions to the extent possible. And the way to proceed further is to ensure transparency and clarity rather than ham-handed or heavy-handed restrictions. One way, as he was suggesting, is that one way is that you link it with the certain revenue stream. The other way is that you identify the clear activities or clear sectors which would be used for generating credits within the national market, and those which will be earmarked for international markets. So there are ways of overcoming this problem, but I think we need not overstate this problem. I think it will be, we will, at least as far as in India is concerned, once the amendments go through in the parliament, there will be greater clarity on what kind of activities will be allowed for authorization, and those which will be earmarked essentially for the national markets. The question is also actually linked to what is being labeled as green credits. The government in India is very keen on development of a green credit market, and there is a flourishing green credit market globally, internationally. So we should utilize that, and we should promote the integration of the domestic carbon market with this green or carbon plus market, which is operating globally. And that will happen only if we reduce these restrictions. So I think we should not be overly concerned. At this moment, there's no need for a concern. In fact, the way forward is to use the 6.2 markets, the 6.2 ITMOs, and which would under which the authorization can also include the activities which have already been undertaken and the credits have been generated. And the private sector can benefit from trading in the credits through ITMOs. And that process will has already received a fillip. It will go forward faster than 6.4. Within next year, I think depending on the bilateral arrangements which countries are now discussing, this will start functioning. So we should be sanguine about it.
Yeah,
Manish, I want to add one point here to Mr. Rashmi said. I mean, I completely agree, sir, with you, what you said. And I would like to say also that ITMO, the definition of ITMO is about real, additional, verifiable, and having sustainable development characteristics in it. They should achieve the sustainable development goal of those countries. And I don't see any other avenues than converting the carbon credits into the ITMOs, because the carbon credits from a CORSIA certified program will inherently have those features in the ITMOs, and it will meet the definition. Other than the carbon credit, if I just decide to issue the surpluses to cover the deficits of other country, then the question would be whether these ITMOs will abide by the definition of Article 6.2 released in Glasgow. So yeah, I'll stop here. Thank you.
Yes, so thanks for the contributions. Now it's time to open the floor for the question and answer from the participants to this webinar. So the first question is, how can Islamic finance play a greater role in the voluntary carbon markets? It had been asked by Gunnar from Jara Capital. So Kishore sir, if you can add some more, if you can add some.
All type of finances are most welcome. I mean, see, the finances will play the major role in the voluntary market, and of course, this the funds should be carefully designed to be able to. I would say to identify the areas of priority mitigation activities which are needed, which are not like commonly known activities. So these funds can be put into the research. These funds can be put into the development of the projects for the needy people who have the opportunity but they cannot implement, and particularly in the priority mitigation area where the capex is extremely high. So and to develop the entire marketplace, to develop the consultants, to develop the verifiers in the area, to be able to cover the transaction cost of a project development, and and if lastly but not least is buying the credits at a respectable price to be able to offer a good encouragement to the project owner, to good support to the project owner through carbon finance. So I would say, yeah, I'll stop here. Thank you.
Yeah, thanks. So Adrian from Brazil, he wished to ask what other instruments are coming out from Article 6.4, excluding the emission reduction coming from the private sector. So that means specifically the difference between the contribution to Article 6.4 ERs, that is a new terminology that had been given during this specific COP, and further its comparison to the voluntary carbon markets or the programs that we do have, the established program like GCC we do have in the present carbon market. So if anyone can throw some light over this specific question.
Repeat the question, sorry. I'm sorry.
So the question is, sir, as in Article 6.4, during this COP, new terminology or new kind of apart from authorized A6.4 ER, this voluntary contribution to the A6.4 ER, unauthorized credits, the new type of credits, I think, are going to get recognition under Article 6.4. So how is it different from the credits that will be get issuance or registration through the other voluntary carbon markets?
Andrea, you want to take this first?
I can. I'll try. Well, Article 6.4 is a new crediting mechanism, the same category of the CDM, of GCC and others. So project developers will be able to obtain a credit if they go through a certain procedure, and then there would be different types of credits. The authorized ones that have a corresponding adjustment and authorization by the host countries, and the others that are now called mitigation contribution 6.4 ERs. So they will create new products on the markets, but the underlying feature of the credits would be quite similar. There would still be emission reductions that have been certified through a methodology. And I'll stop here. I'm not sure if I fully understood the spirit of the questions, but I'll let other panelists chime in.
I'm on the same page that Andrea is on. I think these credits would be similar to the voluntary carbon credits if 6.4 is allowed to be transacted into voluntary purposes. Only the difference could be, and I don't know how the ICVCM will define the rules on the baseline additionality and all. Probably we all have to be moving in the same direction. But the way at least 6.4 is going, and the initial report from the Secretariat, the technical paper from the Secretariat to supervisory body is about creating a kind of a sectoral trajectory, sectoral baseline, and then the contraction curve, they call it. And then based on that baseline, creating the emission reductions. So if, let's say, Article 6.4 has this baseline curve, and the voluntary carbon market has similar, typical those 4.48A, 48B, 48C kind of baseline, then there could be in my view, there would be a difference in the emission reduction per type of projects that can be made for the same activity. Using 6.4 baseline will lead to different emission reductions, and using normal baseline will lead to different reduction. But if ICVCM or voluntary carbon market decides to go in the similar direction of 6.4 in future, then probably they would be at par. A ton will be equal to ton, I would say. Okay.
So the next question that has been asked is, would there any requirement for corresponding adjustment on the voluntary carbon credits?
I can confidently take this one. Well, the answer is no requirement. That's quite clear now. There may be buyers, civil society organizations that are pushing for corresponding adjustments on voluntary credits, and I think if they believe that's the best thing to do, they can source credits with corresponding adjustments, and I believe there would be a section of the voluntary market going down in that direction, but as of today, it is not a requirement, and well, I don't think it would be for quite some time.
So the next question is, which had been asked by Abhinav, he had requested panelists to share their views on Indian domestic carbon market as proposed by Bureau of Energy Efficiency, also its importance with respect to India's NDC. So I request Rashmi sir to respond to this specific question.
Yeah, thank you. This is a good step. These proposed amendments will certainly create a foundation for effective national market in India. At the moment, it is only focused on energy savings, but it doesn't create a value for carbon savings. And the proposed amendments will create a carbon denominated certificate which industries can use. It will also mandate renewable energy obligations for for major industries, major industrial units. So to that extent, it will also give a fillip to the renewable energy market also. There will be greater demand for renewable energy from the grid or from captive plants, and therefore the credits available in this sector will also expand and the volume will grow. Secondly, this national the carbon denominated certificates will be used for trading by the designated consumers. So it's a good step. It will certainly give a strength and a scope and depth to the Indian carbon market. Now, as far as its relationship with the NDC is concerned, quite clearly, it depends on the authorization. If the government thinks that it should be the surpluses, at the moment, as you can see, the national inventory in India is not sector specific. It doesn't exclude any particular sector. It is based on emissions intensity. So all sectors are covered. So it doesn't make any distinction between the energy markets and the non-energy markets. Those credits which will be generated in this carbon market, mandated by the Bureau of Energy Efficiency, if they are authorized they can be traded in the Article 6.4 market. But their use towards NDC will depend on the earmarking of the activities or the sectors which Government of India may do in the course of evolution of its market. That has not been done as of now. It's entirely meant for voluntary market and creating a national carbon market. Its linkage with the trading in the international markets has not been spelled out. So we will have to watch for some more time about the developments on this aspect.
Yeah, so recently confusion had got popped up related to the restriction to sell the credits originated from India. So that specific concern was related to the domestic carbon market or domestic emission trading scheme. So the credits which are being originated from that specific scheme may need the authorization or approval from the relevant authorities. But for international voluntary markets, such kind of corresponding, since the international carbon markets are not voluntary carbon markets are not being governed by Article 6 or it do not affect any national NDC because the corresponding adjustments are not required. So there is no any impact over the voluntary carbon market. So the last question that had been asked by 2-3 attendees is related to the integrity of the carbon credits which are being issued by the programs related to renewable energy projects or energy efficiency based projects or nature-based solution activities or community-based projects like Cookstove. So a few stakeholders in the associated with the industry, carbon credit industry, they do raise questions related to the integrity for the carbon credit which are or the projects which are getting registered or getting issuances. So I would like Kishore sir and Andrea to put your points over this is specific integrity issue, which here and there we used to get various articles related to this specific topic.
Andrea, you want to go first?
I can go first. Well, I have no elements to comment on individual projects. I can say that integrity is really important, and only with integrity the market can survive and continue to thrive. If buyers get the impression that what they buy does not deliver real environmental benefits, they will simply stop buying, looking at other options to make their contributions and compensate their emissions. So, well, I'll leave it at that. Then the criticisms of if the criticism related to individual projects, yes, we can certainly look into the projects, but there are some criticisms that criticize carbon markets as a concept overall. And to those criticisms, my reaction would be to ask what the alternative would be. If people don't like carbon markets as a tool to reduce emissions, I haven't found one that has the same potential to channel private sector finance into emission mitigation projects, and especially from the global north to the global south, which, as we all know, has been a long-standing issue at COP and generally in the politics of climate change. So that would be my answer.
Okay, I would also like to mention here that renewable energy, why it is specifically targeted. I mean, renewable energy has won the maximum projects. And obviously, because energy is the biggest polluter in the world. I mean, see, most of the greenhouse gas emissions are happening because of the energy generation. So it is very natural that if we move to non-fossil fuel type of energy generation, it will generate the maximum credit. So is it because most of the credits are coming from renewable energy? When it comes to cost, there are arguments about that the costs are lowering down. Fine, cost is lowering down, but the tariffs are also lowering down. There are reasons for the program like us to believe so, because we are receiving many submissions, which talks about the internal rate of return, the return on equity, return on debt, and increase in the inflation recently. So, it's all about additionality. Additionality says that whether your rate of return is below an expected benchmark or not. This has been checked thoroughly. This has been checked thoroughly by all the programs, not only us. And it is not only GCC who is issuing the gold standard, where most of the issuances are on the renewable energy only. Only the difference between us and them is that we have not agreed to a decision of making a blanket ban on the renewable energy. And I would reiterate that we want to give everyone an opportunity. Within India, there are so many states. We have different tariffs in the states, different cost of land in the states, different state level policies. And renewable energy has another issue it's about the system cost. Finally, it is not the grid authority which is getting benefited from the carbon credit, it is the project developer. Project developer rate of return, if it is not reduced with the reduction in the cost of or it has not increased with the reduction in the cost of the renewable energy, and if it remains same, then probably they are facing the same hurdles. But at the same time, we have to see the holistic system cost of integrating renewable energy into a grid. That is beyond the investment done by the project owner. That is the cost of transmission lines. That is the cost of distribution line. For 1 megawatt hour from renewable energy, you have to, for 1 megawatt of the renewable energy, you have to build 4 times the size of the power plant, size of the transmission line, because the plant load factor of the renewable energy is almost 1/3 or 1/4 of the fossil fuel based power plant. So, there are many issues which are related to renewable energy. There are so many non-performing assets on renewable energy in country like India and others, which have committed to a low tariff, but curtail down their energy because grid cannot offtake it. They have gone into losses. There are many of them had to close their businesses. So, these are the issues, real ground issues related to renewable energy. We have to take it in mind. Despite that, each and every project is studied by us we do our own due diligence. Verifier has to go and check the data on the ground, and then only the carbon credits are issued. So we stand for integrity, and in any credit which will be issued by us will be, and by other programs as well, will be of the highest integrity. That's what we can say at this point of time.
Yes, thanks for the contribution. Rashmi sir, I wish to get your final comments or final contribution to this webinar. Already we are running late by 10 minutes, so, but within some 30 seconds, sir, if you can add some final comments, and then we will close this webinar. Thank you.
No, thank you, Manish. I mean, I generally agree with the last point made by Kishore on the integrity of the renewable energy credits. There is no reason why we should distinguish between any particular sector and renewable energy sector. In fact, the uncertainties and challenges are even greater for an investor who is investing in this new sector, because the transmission, the system costs are still unknown, and we are still struggling with that. So it's not that the returns are absolutely safe and it becomes a business as usual activity. Second, the last point, I mean, general point is that I think the voluntary market has a bright future in India. And the players who are investing in this, they need not be concerned with the, some little issues here and there. Ultimately, right now, the first task is for us to see that a good, effective carbon market develops nationally. And that becomes the foundation on which would feed both the voluntary market as well as the mandatory markets or compliance markets, either under the 6.2 or 6.4 procedures. Its relationship, the relationship of the voluntary market with the mandatory or the compliance markets will become clearer as this national carbon market evolves. And I think all the stakeholders are contributing to this evolution. The consultations have taken place. And I think we see a bright future now that the guidance from Sharm el-Sheikh is clearer on the issue of authorization. There is a greater need for us to feel reassured, and then there is absolutely no concern. The voluntary market has a good future; it has a safe future, and India being a very large player, I think India will play a key role in the future evolution of this voluntary market.
Definitely, sir, as you know, from 2015, once this voluntary carbon market had got raised, so during last 7-8 years, India stands the #1 position or the largest supplier of voluntary carbon credit to the international voluntary carbon markets. Further, the green credits that you have mentioned are going to take its very big position, and the whole world is looking very eagerly to get a big domestic emission trading scheme, since India is the third largest greenhouse gas emitter in the present era. So we wish that the carbon markets, both the compliance carbon market and voluntary carbon market, will take their very good position to help organizations to decarbonize or to achieve their net zero emission goal under the Paris Agreement. We are very hopeful that we would be able to get more clear decisions and pathways during next COP 28 Conference of Parties meeting number 28, which is going to be held next year during during this November at UAE, that means at Dubai. And the voluntary market definitely is going to contribute to the private sector to meet their carbon neutrality and net zero goals. So thank you very much for the speakers for their contribution, and attendees for their attention to the various topics that we have discussed during this webinar. For any further query or question, kindly do post the same to our website contact us session, and remain in touch with us since we are going to put a white paper related to the outcomes of COP27 within this week. So thank you very much, everyone, for joining for this webinar. Wish you yeah, thank you very much.
Thank you, Manish. Thank you, everyone.
Thank you. Thanks, Kishore, and thanks to Andrea. I think he has already left.
Yeah,
Bye.
Andrea. Thank you.
Yes, thank you. Thank you very much.